Masterclass. Very important subject, topic, or can I say a critical topic, because a lot of people, they are still finding it difficult, they are still finding it challenging. Most problematic subject in business. Guys, in business, there is what we call numbers, figures, because every business is made up, is successful, it's sustainable, it's growing, it's surviving because of one thing: numbers. So if you're going to run a business that doesn't talk numbers, it becomes very difficult for you to look or to project or to assess as to where your business will be tomorrow. So let's talk this subject of money in terms of the figures or the numbers. So there's something that we call income statement, and I know accounting students, they are familiar with that. I don't know, do mathematics students and economic students know that subject? I don't know, but let me just say, I started knowing accounting from tertiary. In high school, I didn't even know what is accounting, to be honest. So I learned accounting when I was an entrepreneur, when I became an entrepreneur actually, because remember, when you start a business, you're just doing, it's hustling, you don't know where you're going, you're trying to make this happen, and hustling, guys, you know. But the most important thing, let's talk figures. Income statement, guys. Income statement has this top thing that we call revenue, income, sales. So a lot of time you ask entrepreneurs, you ask aspiring entrepreneurs, business people, what are your numbers? And this is where they miss it. When we say, what are your numbers? We want you to tell us from the top line. Coach, what are you saying? Okay, top line is that revenue, that income, those sales. We call it the top line because we want to know the story at the top of the income statement. So at the top of income statement, that's what we call revenue. Under revenue comes what we call cost of sales. What is cost of sales? The money that you spend, the money that you are spending to produce the sales that you are getting, meaning the goods or whatever the services that you're doing, for you to make sure that people are buying, are paying into your account, they are paying into your business. You get what you call sales or revenue or income. That money, that's what generate that money that we call cost of sales, meaning you need to pay something so that you can sell something. So that procedure, that story, we call it cost of sales. So after cost of sales, we're saying revenue, the top line, it's revenue minus this cost of sales. So after this cost of sales, we get what we call now gross profit. Guys, the most important thing and the most critical and troublesome figure in any income statement, in any business, in any project for entrepreneurs is this gross profit, because gross profit will determine the size of your industry, the size of your business. Gross profit will determine the industry, the viability of your company or your business in a certain industry, because every sector, every industry has got what you call the gross profit margin or percentage that you need to operate within. So this gross profit is like your salary. Remember, when you're working as an employee, a company pays you what you call salary. So when the salary comes in your in a salary advice or pay slip, there's a figure that we call gross salary. So gross salary, it means it's a money that you're supposed to get, that we call the cost to company, what company is paying you every month. Now, from that figure, there's what we call deductions. So deduction, we talk about tax, we talk about UIF, we talk about medical aid. So those figures, we call them deductions. So it means you cannot celebrate a salary that is gross salary. You need to celebrate what we call net salary. Gross salary minus deductions, that leads to what we call net salary. So even in business, this number that we call gross profit is not your money. It's not your money. You cannot celebrate. You cannot buy anything from that money to spoil yourself. It's the money that belongs to your business. So what is the story after that? We have what we call operational expenses. Now, the expenses that maintains the business, the salary that you pay your employees, the maintenance, the internet, the data, the telephones, printing, grocery, if you are buying grocery in your business, the rental, all those stories, fuel for your fleet. All those things, we call them administrative costs or expenses that we call operational expenses. So it will be gross profit minus all this story that we call operational expenses. So at the bottom line, now that's the most important thing. Hey guys, investors, you know these people, they love this English, and I have to be fair. we need to understand and to look at or to search if you understand the business language. So we will say, tell us now your top line. It means revenue minus cost of sales equals to gross profit minus operational expenses equals to net profit or loss. So the figure that we get after minusing all, deducting all the operational expenses, we call it the net profit or net loss before tax if it's net profit and interest, meaning even after you get that figure, you subtract, you deduct all the operational expenses, you still have to pay what? The tax man, you still have to pay the interest that you are paying towards your amortization or loan payments. So that's another big English that we'll discuss going forward. Then that's where the story of EBITDA comes from, earnings before tax, deductions, and amortization. So the important part is this figure that we call the net profit or loss before tax and interest. That is where now you can start celebrating if there's a positive figure, meaning if there's a profit. But if it's a loss, guys, we start saying your bottom line is not healthy. So it means now we're looking at the numbers, the figures, because remember what I said, business is all about the numbers. So if the numbers, if the figures are not balancing, if they are not talking to the story that you are telling us to say, I've got a good business idea, these are my clients, this is what I'm going to sell, this is how much I'm expecting. So if the entire story at the bottom line is not talking to the business idea that you have presented to us as investors, then guys, believe me, you don't have a business. Because we're saying your business must be feasible. It must have a case study to tell. It must have a story to tell. And that story is simple. We want to know, ching, the figures, the money, the moolah that comes in the business and that you are left after all the expenses. So as investors, business coaches, we tell you to concentrate much on this top line and bottom line. Hence we talk the figures and the numbers. So guys, believe me, in every business, income statement is what matters most. But there is what we call the cash flow of the business. Meaning, if you have the minus and the bottom line, it means you cannot be able to sustain or to survive during the course of the month, because of the duration of the business operation. So you need what we call cash flow. As they say, cash flow is king. So there must be a money that is there to take you every day in your business. So that's the most important thing, guys. So when you start a business, when you go and run a business, remember this: you are going to master and to memorize and to cram and to understand and to learn this thing called income statement. And most of the most important element, the most important part that we need to highlight is what we call the income minus cost of sales equals to gross profit minus operational expenses, the bottom line, meaning the net profit, the money that business is left with after expenses. So that is why we said business is numbers. So don't go to investors and tell them the story and inflate the numbers, say this is how much I'm doing. We going back to the same story through your income statement, the money that comes in the business. And this is important, guys. Forget everything that I said, but don't forget this: you must be able to record and account for every cent that comes in your business, every dollar that comes in your business, every cent, every puller that comes in your business. Make sure that you record, meaning you pay for something, you record. After you record, you have to go back now, account, to say I paid $2 here, I paid $1 here, I paid $3 here. That's accounting. But where does it come? It is informed by what we call recording. What went out, what came in, it must be recorded and accounted for. So for every business that doesn't have that record, if you have an employee, fire that employee. If you are an employee, if the owner is that employee, you need to take yourself to the hearing and fire yourself, because you are the danger to your business. Thank you very much, champions. See you next.